Right, so I want to give a full breakdown of the trades I've taken this week and then the ones I plan to take. So let's go. So basically, we started with gold. I have this setup on gold, but I've not yet confirmed it because of the position right now. This buy, this buy here is forming premium, but it's actually a good buy. My only problem with it is that it's forming in the premium. So we have the sweep, yes, and we have the structural liquidity, but it has gone so far, so I won't be taking this buy except something else comes up. So then the next one I have here is on NAS 100, of which I'd already hit CP. Sorry for not informing you on time. So basically, what I see, I spotted my setup, the sweep, liquidity, POI, break of structure, and then there's like my type 2 set, my type 1, and I was like, okay, it's worth the risk. Let me give it a try. So after I saw that, I went over to my 4 hours to validate where it's coming from. Now, we're looking for a swing structure. We see this. All right, so it's expected to move in and drop. Now, take out my 2, I pull it in from here. Now, normally, I'm not supposed to take this trade, but since it's NAS 100, it's always very bullish. I decided to take the trade. Now, and almost everything here on, apart from this, everything here basically, and where price was at the moment, is set up formed in the discount. So I was expecting to just hit TP and all, and it was worth the risk. So apart from that, every other thing here, the break of structure, the liquidity falls in the 50%, the POI, everything falls in the right place when you put your premium and discount from the break of structure. Now the next trade I was looking at here was GBP So not gonna lie, this trade is a low probability setup, but what I saw was the same thing, sweep, liquidity, break of structure. But why was it a low probability setup? If you look at it from here now, I think if you're familiar with this, you'll see the mistake. It's not a mistake because I saw it and I took it like that. But this setup formed in the premium zone. So let's say we're looking for the immediate swing structure. The immediate swing structure you can see this bullish, you can see this bullish swing, right? Now, if you pull this thing like this, see what I'm talking about? Look at how it fell. It formed in very close to the premium, which is not a place we want to take in our buys from. We want our buys to form well in the discounts and not even tap into the premium. If this trade had formed in the discounts, this would have been a very valid buy, even though it went to the premium, because this is a bullish trend. So we hit stop loss on that. Now for GBP JPY. So GBP JPY, I'm observing GBP JPY. The position, we have this big demand zone and it broke above this block here and it's retesting and retested. So this setup formed. And now if we use this for our swing structure, sorry guys. If we use this for our swing structure, right? If we use this for our swing structure and put our discount and premium, see that this trade formed in a discount, even though it tapped into the premium. But why am I confident? Or why do I feel like I'm going to be confident? taking this GBP JPY trade is the fact that basically GBP JPY have been moving. If you look at basic market structure, so looking at basic market structure, see it's making highs and lows, another high and low, and high and low, and high and low, and high and low. Now, even though this low here have taken out this place, it has not still become bearish. When it become bearish is when this particular low here is taken out. And if this low is taken out, that is when this trade will hit SL. But for now, it has not been taken out. So I'm still confident in this setup since the market is bearish. So people will be like, oh, you have a sweep of market shift and break of structure, like it's not switch. I'm like, even though if this low is not taken out, even if I hit SL, if this low is not taken out, GBP JPY is still bullish until this low is taken out. Now, the next one I had NZD card. So I spotted this yesterday when I was in my pre-market analysis. So by the time I spotted it yesterday, basically, the market was on this candle here. So that was why I wrote a full 4-hour candle close to validate the break of structure. You understand? Now, if you look at this, you see this is a low. This low was taken out and then break of structure. But it was not fully bullish until this major low here has been taken out. Now it has been taken out now. I will do it for price to come back into the zone and then I take my sell. Wait for price to come back here and I take my sell. Understand? 1 to 2. Or I can even target 1 to 3 or 1 to 2.5, but basically 1 to 2. So when price comes back into here, can sell because it has taken out this low. Now, for our swing structure, from this place like this to this high is what we can call one swing structure. You can validate and see this setup. This setup is in the premium. This setup is in the premium that's closed above this. So if it comes back, yeah, you can hit our SL. It can take us and hit CP. So it's a game of probability. But I've I've seen what I've seen. So it's left for the market to do its thing. And I'll still do further studies to validate. For example, now if you check here, my position size on my YouTube, I'm on I'm watching my courses and I'm studying and I'll validate if I find something that is here that is not supposed to be here, then I cancel the trade. It's as simple as that. Now, another thing I'm overlooking here is the sweep of liquidity. Now, this would have been a better sweep if this sweep, if it was more obvious, like came up to this height, where as you look at it, you're seeing clear something like this, um, something like this. You see clear the sweep. See, you're seeing the sweep clear. If that was the type of thing that happened here, where the thing is clear, and I've said yes, there's like a high probable setup, but this sweep, a sweep is a sweep. A sweep is basically a sweep, but it's worth the risk at the end of the day. It's worth the risk. So just be waiting for further validations. So for now, the only two trends I'm looking out for is GBJPY and NZD card. Alright guys, trade safe, trade carefully. At the end of the day, manage your risk. So that even if I hit this as an SL, hit this as an S, hit SL on this, and hit SL on this, and I can still take more trades. So manage your risks wisely. Peace. Until next time.